Scott Bauer, CEO of Prosper Trading Academy. You're doing fast markets, so you're with us here in the office.
Yeah, it's great to be here.
So Twitter, as we were just talking about, has got so much going for it. I think it's so interesting that this company's basically gone sideways to a little bit higher, which actually puts it technically ahead of some of the other social media companies over like a 1 year time frame. How are you trading this? What do you think?
I'm looking purely technical.
Okay.
Right? You guys just talked about the range that it's been in, that there's a little bit of resistance above here around 35, but there's also some major support here. You've got the 50 and the 200-day moving averages just below the market right here.
Okay.
So market maker expected moves a little over $3 or so. That puts us right up to that 37 and a half area, Oliver. And you know what? If you come up to that area right there, that's actually a very, very noted area. That's the 50% area over the last 52 weeks between the high and the low. That's something that, technically traders look at and say that 50% retracement, that's a big number. I'm looking at an upside here.
You're looking at an upside to what, 37 or beyond that if it goes?
About 37 and a half.
Okay.
So the way that I'm going to play this, with volatility actually pretty cheap going into earnings here, I think IV rank, if you look on the TOS platform, it's only about 42% or so. I'm actually going to buy an upside call calendar spread. Selling this week's 37 and a half call, buying next week's 37 and a half call. I could do that somewhere 10 to 12 cents or so. We get any sort of upside move somewhere in the range of, let's say, 36 to 39. This thing should explode real nicely. If it doesn't, if we get bad metrics, stock moves down, I know my risk here. I know my risk here. I'm totally capped out on my risk.
So the duration for this is when which expiration? Because you're selling
selling this week.
This week's
buying next week.
Okay.
But I don't plan
a little
on
bit of time after earnings.
I don't plan on holding this till next week. In a perfect world, I'd be out of this tomorrow morning, maybe even Wednesday.
Okay.
Looking for the big collapse in volatility to take advantage of that and the upward move. You always want a stock to move to the strike, to the short strike there. So 37 and a half would be ideal, but really anywhere 36 to 39 areas is sweet spot for this.
Does it concern at all that the 200-day is kind of, it looks like it's being pulled towards the 50 and that kind of the price action maybe slowing a little bit or picking up on a shorter term basis?
No question.
Yeah.
No about it. And that's why this is, let's say, a cautious upside trade.
Okay.
And again, there's a lot of support here, 50 and 200-day moving average, but I think this could be the time here that we break out above that resistance at 35 there and trend towards that 37 and a half area.
Yeah. It's interesting to see that dynamic between the short and the longer term because we know Twitter's been doing okay the past couple months. I mean, what hasn't been doing all right?
Right.
But it hasn't, broken out. It hasn't been a part of this year-to-date rally in a big way, right? I mean, I guess technically speaking, because we had the sell-off at the end of the year, but it's gone from all of 26 to 34. Maybe there's some catch-up to be played, sort of on a macro scale.
I really think there is. And again, if you look at that big high over there back, almost a year ago, last June or so, back to the Christmas massacre lows that we saw here, that midpoint puts us right at that 37 and a half area, which also coincides with the expected move on earnings here.
Yeah. All right. That earnings for the big drop last year was a doozy. We're going to see Scott Bauer with us in studio, the CEO of Prosper Trading Academy. Good stuff, Scott, on the charts.